Hi, this is Ken Long at Tortoise Capital with a review of the daily trading report and the debriefing for October 20th, 2016. Market's still bullish normal, middle of the range for annual and 10-day trading periods. You can see we're right in the middle of the 10-day range here. No signals in channeling and overreaction. Volatility hasn't really given us the spike that the red implies yet. Although as we get closer to election day, I think the probability gets greater. You can see the trending in ADX has flattened out around 25, and the bears are still in charge. We have a handful of channeling and overreactions, a 5DD in the VIX. Some good 551Ws in XLY and Chevron, and then a bundle of decent auto framer setups with some of our usual suspects in here. Procter & Gamble at 4.9 to 1, McDonald's at 4.1, Johnson & Johnson at 3.7 on the auto framer, and with a channeling and overreaction. Let's take a look and see what that looks like. Okay, so here's Johnson & Johnson. This is channeling and overreaction. It's also a Z3 setup. I like that it had a higher low. The close in the lower portion of this range really puts it in a critical state. You can see that there's large range days. Talking $4 on 118. It's almost 3.5% intraday movement. So very directional in both directions. So if we get an intraday move starting, you can expect lots of follow through in Johnson & Johnson. The fact that it's down around Z3 says our initial target is the Bollinger Band mean at 118. It's got some things it's got to get through, like Z2, the baby dragon, the dragon itself. And by the same token, a violation of 114.50 says there's another one of these type moves, a $4 or $5 intraday move to the downside. So at the bottom of the range, this is really a low-risk idea. If it fails, you're on it. If it recovers, it has quite a long ways to go just to get a reasonable move. You can see that the river has rolled over. Everything is crossed back over the RL270. The RL270 has started to slip downward. And so this is one where we want to play on the short side. Really, this target right over in here, 112, is in range. If that fails, the next support level is down around 109. So you get two really good price levels to look at on the downside. If this support over here collapses, then look out below. Back to the report. Here's Walmart at 4.2 to 1 and in a doji. And so let's just see what Walmart does for us. Longer term, you can see Walmart is offering some fair value up here around 74.5. Z3 collapse down here to 67.50. It's put in a week of improving bottoms. The RL10 has rolled up, across the baby dragon, which has rolled up. The 10 has just crossed through the dragon, and so this is failure to fail further, but it's the pause right now. So when we zoom in a little closer, we can see what we've got here. This is where we framed this trade for the last time, that it was at Z3, and we said we wanted to be long at the green line, and we're in pretty good shape if we've taken that trade. Again, the stop below the RL10 is the place where you can get you can stop and reverse, not later than that point. And so Walmart's still offering some opportunities to get back to the Bollinger Band mean around 70.50. And then the top of this hump is the real resistance at 72.30. If it gets through there, then it can get back to the RL270. But this is the basis of that regression line fractal framework. When you find that maximum excursion from the RL10 to the RL70, and then measure this in terms of ATRs, you realize you can get some large multiple trades just on a return to fair value, and that's the move that we're starting to see here off the support level. Now, the fact that it rolled over yesterday, this is a 1, 2, 3 entry the other direction. So in that case, we'd be looking at getting short there with a stop either here on a one-day range risk or at the top of the swing high. And then playing this short with the idea it should come down and test 67. And then if it fails through 67, that's where you would add your second position. Let's show that in purple. This is where we'd be adding that second position. Were we to be short? So a reasonable trade frame in Walmart in both directions. Back to the ETF 30. No patterns per se other than a 5DD and VXX. We'll see a daily chart of that here in a minute. 551W and XLY. Let's take a look at that one. So this is a 551W. It's up compared to 5 weeks ago. So this is 5 weeks ago over here. It closed higher. It's down compared to 5 days ago, so it's down. And it was a one-day. The close was higher than the open, so there's just a slight positive twist here. What I like is this double bottom at 78, and then is finding support here at 78.5. And if this continues, then that baby dragon's going to turn and follow the RL10 up, and then we're looking at 80, 80.5, and 81, and then really the ultimate target up here around 81 3/4, almost 82. So the continuation momentum there gives us a favorable reward to risk. At the same time, if it violates this 78.20-ish, then it gets down to Z3 pretty quick. Let's see where it can go from here. Yeah, really, it'll come all the way back and test the belly of the dragon here at 77. So this is a critical state because you have a favorable reward to risk to get to 82, but then failure below this swing low gets us down to with a target of around 77. So tradable in both directions. All right, let's take a look at some trades from the room today. All right, this is one from Sonal where she was playing the collapsing dragon and describes what it was like holding it through this entire sideways quiet channel where she was already in her position and had a directional bias established and just waited to see what it would do. Stop was never taken out. It collapsed in her favor. Beautiful exit as it comes down and tests Z-2 and Z-3. Starts to reverse. Very nice cash. She didn't have the will of the time will pattern of money, didn't have the will to then play the dragon here, but really nice trade. And remember, these extreme moves set the conditions for extreme reversals or extreme continuations. So from extreme conditions come extreme results, but this was very well played. Good entry, good self-regulation, and then carefully managed exit. Well done. Here's what I want to show in XIV. And these are daily charts, and so this is a move here from 30 down to 20. That's a 30% drop in 3 days. And then you get a Z3 excursion. You get the Williams percent R. This becomes a channeling. And now you get a nice follow through. You get out here to the second test of the Z2. And now the big drop now from 42 to 30. That's 12 points on 42. That's a 25% drop in a couple days, followed by a test of Z3. the over sold conditions on percent R, and this walking up the stairs, jumping out the window routine. 40 down to 34, that's 6 points. That's about 15% sell off. Didn't quite get to oversold, but it did just touch the southern end of the river and resume. So these sharp excursions are always of interest in terms of being ready to buy back into the implied value of a retest. So we're getting close to that critical state once more, and we're in the red on risk C. So I'll be ready for intraday moves with VXX should one of these big signal days occur. Here's a nice one from Kim in EWZ. This is that lazy W. Pocket entry, pattern 4. Beautiful exit. Wow. I mean, wow. Then a resumption on the pocket, very carefully done to preserve capital. Could this have been a stop and reverse for a owl pattern going the other way? Certainly. No reason not. And then this would have been the ideal exit. You don't have to take every signal. Just the ones you do should comply with time, will, pattern, and money. Here's one, another one from Sunal. This is a collapsing dragon. This was the RL10. Couldn't even get out of the dragon, rolls over again. Collapsing dragon, short, and cash. Beautiful. This is a C3 test, so 1, 2, 3, and very nicely done. Here's one from Bob using this Heikin-Ashi chart. This is Brazil short. This is a collapsing dragon. And breakout, an owl pattern, if you will. Here's the unambiguous move. RLCO outside the river. RL10 crosses the dragon. 30 is down. The dragon is down. Short. And very nice cover just below VWAP as it's starting to find some support. That's good enough. Lather, rinse, repeat. Here's a hybrid frog in AXP. This was on our trade frame highlights from yesterday. There was an enormous gap up, and then it started to take off. So it opened, big gap up. 1, 2, 3. Here's a 50-cent move off the low of the day. Buy it with a stop, 50-cent stop. Takes off. Let's get paid early. So this is about a 1R cash right here. After this rollover in RLCO, Baby Dragon is rolled over, and failure to follow through. That little sign of weakness is plenty. This finds support, however, at 65.90 or 66. Buy the pocket long with the same 50 cent as it's marching north. Shift up here, lock in, no lose. Follow the Bollinger Band mean as it starts to come out of the threatening to come out of the dragon. Just go ahead and cash. That's about 1.2R. And that's everything I want to cover for today. This is Ken Long at Tortoise Capital. Keep your risk measured and your powder dry.